We are live. Thank you so much for joining me. I'm Mitch Goldberg. We're going to talk about the stock market today and why people are starting to get excited because it was generally a good day. The Nasdaq just had its first 4-day uh, consecutive 4-day rally in ages. Um, Natural gas prices just went to the lowest they've been in almost 2 years, or in the $9 per whatever thousand cubic foot. Now they're down to the threes. Auto sales. Let's talk about the price of used cars going down. That's 5% of the consumer price index. Rents in a lot of areas are are going down. So there's a number of things coming down which are starting to give confidence to investors that the Fed's rate hikes are having their intended consequence, which is to slow the economy down, slow price rises down. We could even see a negative CPI print tomorrow. So a lot of people are trying to figure this out. Now, I know we spend a lot of time reading the tea leaves here. What's the market going to do tomorrow? What's it going to do next week? What's it going to do this year? And we also know that that's like the least important part of your future finances, of what you're trying to do financially to achieve your goals of either retirement, paying for college for your children, or just being able to work at a job that that you get more joy out of, even if it pays less money. Whatever your vision is of financial freedom, or at least some form or kind of financial freedom. So these are the things that we talk about a lot. But I do want to get into the stock market because I think a rising stock market would help a lot of people out. It would create a bit of a wealth effect. The Federal Reserve doesn't want investors to get overly gung ho on stocks. So if stocks go up and people have this, what's called the wealth effect, they decide they can start spending more money again and they feel more confident financially because they see their assets go up, and they have not yet really seen their home values go down, unless you live in a couple of places like San Antonio, Texas, Las Vegas. There's a couple of places where prices for new homes are going down quite a bit, but most neighborhoods haven't really seen price cuts yet. There's so little inventory in the market as it is. We'll see what the housing market really looks like starting in about a month, when we get into mid-February, and that's when that's like the very beginning of the spring selling season. However, so having said all that, it looks like inflation is moderating. It could be negative from November. I'm sorry, from December, from November. But year over year, inflation might have only grown in the 5.5% range or so, maybe 6%. These are expectations. Now, you might be wondering, did did I did I make any bets ahead of this? No, I typically do not make bets in front of a big macroeconomics number. It doesn't really make sense to me. I invest in what I think is right. I'm not looking at one particular number to make or break an investment thesis for me, especially when I buy a stock. I'm looking to be in it for years, 20 years, that for a long time. For me, it's easier to be a long term holder than a short term holder. Mentally, though, for most people, it's easier to be a short term holder because people panic and they sell, or they get greedy and they start buying and selling other things. A lot of people, if you recall, during the beginning of the pandemic, early 2020, all of a sudden people thought they were really good traders. I have a friend, a good deal younger than me, who thought he was so good and so talented as a trader. He actually proposed that I take him on as my full partner and let him trade, pick and buy and sell the stocks. And he was in all, like, anything that was crypto related. He was in anything that was like a pandemic stock. And boy, oh boy, this guy thought he was so smart. The hubris that people have, it goes up. The pride level just swells so fast, and that's what we avoid here. So I don't get all pulled up on an economic statistic. If the market goes up, great. If the market doesn't go up tomorrow, great. Whatever it does, it does. I've picked the investments for myself, for my clients. Some clients use individual stocks, some use exchange traded funds. It depends on the client. Anyway, don't get caught up in this, but it is exciting to talk about it. It's exciting to geek out a little bit on the on the it's exciting to geek out a little bit on the statistics. So anyway, let me roll a quick introduction. But now you know why the market's up. People are expecting inflation figures to run a little cool tomorrow. That could put the Fed on pause for a little bit, and that would be just so good for the stock market. But if the stock market goes up too much, the Fed's going to say, we want to knock you guys off your pedestal and see the market go down. So I just think either way, though, it's going to be it could still be a heads, I win, tails, you lose situation, no matter what. Okay, here's the intro. Stick with me for a couple of minutes. I know you're busy. I want to get through this too, as much as I love live streaming. Here we go. All right, thank you for joining me. We're just getting started. I'm Mitch Goldberg, and you are watching my live stream, Be the Boss of Your Money, because it's very easy for your money or lack of money to take control of you as opposed to you taking control of your money. You need to be in control, and it's not so easy to be in control. This is why so many people have trouble with a budget. This is why I always say to people, don't think of a budget as like a restrictive diet. You're going on a strict budget and you're punished. But think of it as priority. What do I really want? I'm going to spend money on that stuff. Everything else that I kind of want a little bit, I'm not spending money on. That's how you prioritize. Obviously, you have to pay for your needs as well. People make not a lot of money, retire quite successfully. It's because not just because they were disciplined. I think discipline is like the most overused word when it comes to finance. Willpower. I don't even know if willpower exists. It's just that people get into a mood, their heads get filled with dopamine, they're excited about something in the beginning, and then the dopamine wears off. They're no longer in the mood to finish with something, and then their willpower, I'm doing air quotes, willpower goes out the window. Okay. I think it's more important to think in terms of what you could prioritize, automate as much as you can with your investment dollars. Automate what you put into your 401k every month. Automate, and you could do this probably with your employer. You could actually have your employer send part of your paycheck when you do direct deposit. You could send your direct deposit, your paycheck, to more than one bank. Like, if you get paid $2,000 a week, which is not a bad income, right? For most of us. I know if you live on Long Island, you're like, oh my God, I can't imagine only making, $2,000 a week. But, you could say, I'll have a certain amount go into my 401k plan, a certain amount, a couple $100 going into another bank account, and the rest of it going to your main checking account to pay your bills for your discretionary funds. And that money, spend it all because you did your part. You already saved for your 401k, invested in your 401k. You set aside money for savings, okay? And the rest of the money, spend it. Enjoy it, okay? Enjoy taking control of your money. These are the things that I go over with clients. So not every single client needs help with a budget or saving and investing. You as you would expect, a lot of people come to me. They already have money because they've accumulated assets and they're pretty good at this stuff. But I do have clients who come to me with assets who are not good at this stuff. And they have assets almost by sheer luck because they just had one or two great years. And now they're worried that they're not going to have the ability to hold on to what they made. Sometimes people get an inheritance, they receive a nice inheritance. I mean, I've had clients who've inherited decent amounts of money, 500,000 or more. It's a good amount, and I already know they're gonna blow through it. As a matter of fact, at this point in my career, if I'm working with somebody who has assets they want to invest in, they want me to be their financial advisor, if I make my own determination and it's subjective that it doesn't matter what I do for them, they're gonna run out of money in a couple of years, I don't even wanna take them on as a client. It's a headache for me. It's a disappointment for them because they think that somehow I'm going to have these magical beans to make the magical beanstalk, like the magical stocks that are going to go up so much and it's going to cure all their financial problems. When the problem is them, it's internal. I don't take those clients. Now, that might sound funny to you, but it's I not everybody's meant to be a client. I've seen clients with a good amount of money, from a divorce settlement or something, and I see how they go through it. Like, oh, they've got a 500,000 in the market. That's a nice account. But that a couple million like 2 years before, and they just were living off their investments, and they're going to be through that 500,000 in like a year or two or three. And I'm doing all this work, and I don't get paid a lot up front. My the way my clients pay me is just a little bit at a time on a quarterly basis. So if I'm not going to have a client for like a good while, I have to look at the economics to tell you the truth. I've got to look at the economics and say, might not be worth it. Now, if somebody is getting started in their career, in their financial abilities, then I want to work with them because they're still teachable. We could still break their bad habits. They're still motivated. Some people aren't, but when I have somebody who makes like $300,000 a year for 3 years in a row, and all they could do is put away, $6,500 into an IRA, and that's it. They have nothing left. I don't really think that person is going to be a good client long term unless they're open minded to making the changes that we here at Client First suggest. All right. Is it fair? Well, look, I'm a small business owner, but as a business owner, as an adult, we are adults here at Client First. My partner and I are able to pick and choose who we want to do business with. And we want to make sure that we're putting our efforts into the right client. But I want the clients to know that if I'm giving them my all, that there is a responsibility that they have to give us their all. All right. And again, we're not greedy. We're not like, making big bucks selling big upfront commission products. We are fee-based guys. We're just, make a little bit at a time. So we are willing to take on smaller accounts, smaller investors, because we see potential in the relationship. Okay, so we're not just about, oh, we've got a minimum. We don't really have an account minimum. And I would say if there's somebody's older, I'm 55, so let's say somebody's my age, they don't have a lot of money to invest. I'll happily take on that client because I want to help that person. Uh, but they have to be prepared to be a client. If they're my age and they have no financial sense, no financial ability to budget, anything like that, they're probably not suited to be my client. They need to fix themselves first. It's, in other words, people who come to me to fix them are coming to the wrong person. You might need a different professional than what I am qualified to do for anybody, right? We're not psychologists, we're not therapists, although there is a very large component to what we do that has a lot to do with empathy, listening to something, letting you know it's okay to stop beating yourself up. Just sometimes stuff happens just outside of your control, or you made mistakes, but you want to learn from them. Uh, we don't always learn from mistakes. That's okay. Are you motivated to learn from your mistake? Because maybe you just need somebody else to help you do a course correction. That's okay, as long as you're motivated. So it's great to learn from mistakes, but it's also great to learn from someone else. Now, I've been doing this for 32 years. My partner Bobby's been doing this for over 20 years. So 52 years between the two of us. We know a lot. We want to help a lot of people. That's why we create all this content. We just give it all away. We're not worried that, oh, somebody's going to take everything that we know and they're going to do all this stuff on their own. If you want to try it, try it. Go ahead. There's more to it than just the experience and the knowledge. There's a lot more to it. It's you really have to love what you do. I think also got a few people out there. I see Tina. Hey Tina, TLM, you are out there. Thank you so much. I appreciate the heart. And everyone, if you don't mind, give me a thumbs up or a heart or a wow or an applause or a celebrate click, depending on which social media platform you're watching this on. It helps spread the word about the work we're doing here. It helps the rest of your connections see what we're up to here in terms of financial literacy, financial education. Uh, you learn a lot from us. If if you were a viewer of the show, you avoided the metaverse ETF. You avoided the new that really hot. Remember that SPAC ETF was so hot? Oh my God, SPAC ETF. Here's where to get in on all the SPACs. But if you take a piece of junk, it's one thing. But if you diversify your junk and you have 100 pieces of junk in the portfolio, it's still a junky portfolio. So we avoided a lot of these things and we went over these. We went over the game, the meme, MEME. We went over the meme ETF, that there are firms out there that just try to capitalize on whatever is popular with investors for hot money, and then they just create some ETF, attract somebody, get some fees, and they go away. We teach you guys to avoid all this stuff. We identify this stuff so that you guys don't have to. Okay, Daryl is out there, my friend. It's really cool when you learn from other people's mistakes. Absolutely. Most experts have gone through the trial and error. Let me read this again because I'm just like, blah, blah, my tongue is not working today. It's really cool when you learn from other people's mistakes. Most experts have gone through the trial and error and have written great books on how to succeed in almost any arena. Thanks for what you do at CFS, Mitch. Thank you very much. That's a very nice thing to say, Daryl. I really appreciate it. Thank you. Phil is out there. Hey, Mitch. Hey, Phil. How are you, my friend? So nice of you to join us. Love you, buddy. And that is awesome. So let's take a look at what happened in the market today, and let's take a look at what's exciting. Okay. So let me just I'm going to just make the screen a little bit larger before I put y'all on it. And we're going to do a screen share with me in the top. Here I am. Let me just here we go. All right. So the Dow up 268, pretty good, almost to 34,000. NASDAQ up 189 points. And the NASDAQ has been going up by leaps and bounds in the last couple of days. It's up a lot. Gold is almost to 2,000. Oil had a big up day. There's always something going on in the oil market, whatever the news was today. But that's a pretty good upside move in oil. Oil under $80 is what we want to see if you're a consumer of gasoline. If you're an investor in oil stocks, you want over $80 a barrel, and that seems to be the magic number, $80 of under 80 bad for oil stocks, above 80 good for oil stocks, under 80 good for drivers, over 80 bad for drivers. Okay, the 10. Oh, by the way, Phil, I was looking at cars, and I agree with you about the electric cars. Are just battery operated cars. I know a lot. I might get some hate now for this, but I'm just not buying into it. If it was if a Tesla was my second or third car, it might work. But if it's really cold outside, you lose like half the range of the battery. And if you didn't charge your car for a couple of days and it's already at like 50%, you think I gotta have 150 miles on it anyway, and then it's really cold. You go down to like 80 miles or 70 miles range. Now you've got to take the time to plug it in, be late to whatever you're going to do. And I just have this thought that if it's an emergency and I have to be somewhere immediately for my kids, and I only have like 10% battery power left in my car, I'm going to be really freaked about that. I like hybrid. That's kind of my way. Anyway, or a good gas car, whatever. Okay, do what you want. It's your car. Okay, 10-year down to 3.5%, and that is going to bode well for mortgage rates. By the way, mortgage refis have been going up a lot in the last week, a lot, like a noticeable amount, enough for it to generate a headline on CNBC.com that uh, mortgage rates fell and there's a surge of refinancing. And it looks like they could go down even more. And we'll see tomorrow's CPI number, which we've been talking about for the last few days. That could actually bring rates down across the board in all rates, auto loans, you name it. Um, I don't think credit card rates are going to go down. The average credit card rate, interest rate is like 19.9% now. It's outrageous. I mean, like it's like organized crime families would salivate to get that kind of yield, and it's legal. Okay, but VIX is up a drop, no big deal. And let's get into the bond market. So yields down across the board. You're still getting the 4.8s for a 6 month, a 4.7 for a 1 year. These are pretty good yields, folks. I told you I'm interested in these yields. Certainly for myself, I think these are pretty good places to park some money, depending on your goal. If you have money that you're going to need in 6 months or a year, these are good places for it. If you want to build up the fixed income portion of a portfolio, so you want to be 30% bonds, these short-term treasuries, the T-bills are a good place, I think, for that. Obviously, for the right client. I don't want to come off like I'm making a specific recommendation to you, so please consult with your financial advisor and or tax advisor before investing. Okay. Well, by the way, did I tell you can't invest directly into an index, but you could invest in a security that tracks or mimics an index? Did I tell you that? Did I ever say that? Oh, did I tell you, by the way, I woke up and I had this crazy thought. Diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. Just a random thought that just popped into my head. I thought I'd share it with you. Okay. So let's take a look at the commodities complex. Okay. Oil up, gas up, gasoline up a little. What's the price of gas by you guys? I've been paying about $2.95, $2.99. Most gas stations near me. Some are like 305, 310. But it's generally speaking, around $3. All right. Platinum. I don't want to just look at the metals now. Let's look at agriculture because wheat has everything. Let's take a look at how wheat is doing. Maybe I should do like the commodity of the day every day. Okay. This is the next wheat contract, the spot. Okay. So if we go to the year, in a year, wheat has basically round tripped. Okay. It's 739 from 757, the bushel. That is basically that inflation thing you saw was all this spot here. And then it comes down a little bit up here in the fall. But wheat is down a lot. It's lower than it was a year ago. And, everything has wheat. I mean, meat is from wheat. Corn is a form of wheat, right? Form is a wheat. Correct me if I'm wrong. But let's take a look at the price of corn. I just like to look at these because when you look at these, often you see what's coming. But corn, nothing great. I mean, it backed off from its highs and it recovered. It's been kind of steady. Corn has more to do with chicken than anything else because chicken is basically corn on legs. They feed chickens a massive amount of corn. It makes the chickens big and fat, and then we get more meat on the chicken, bigger chicken breasts. And I don't know, is it good for you? Is it not? I can't really get into that. I gotta eat. We need the calories, and we're lucky to be in a country where food is so plentiful. How's that? Okay, so that's basically it. We got a big economic statistic coming out tomorrow, the CPI. It's coming out at 8:30 a.m. So tune in. If it has a monster reaction in the market, I might do a live stream first thing in the morning. If not, I'll just be here at 4:30 tomorrow, bringing you the news and the perspective and the insights. I want to thank you so much for joining me. If you have any questions, or if you think of any questions that you'd like to ask me that maybe the show stokes some curiosity, definitely hit me up in the comments. I'll see the questions. I love hearing from you. It's the best part about what I do. Tina Daryl, Phil, thanks so much. It's great to see you guys out here today. And until then, tomorrow. Thank you so much.